On a quiet morning in Brasilia, as the city slowly awakened under the golden hues of dawn, something remarkable was quietly unfolding behind the scenes. A seemingly routine digital transaction was about to signal a major shift in the world of global finance, one that would ripple far beyond Brazil's borders. A shipment of Brazilian coffee, destined for the bustling markets of Mumbai, was sold and paid for. But this time, the payment didn't pass through New York, nor did it rely on US dollars as the intermediary. Instead, the transaction was settled directly between Brazil and India, using the innovative new BRICS Bridge platform, a digital infrastructure designed to connect economies. Developed through years of collaboration by Brazil, Russia, India, China, and South Africa, the BRICS Bridge has finally moved from theory to reality. Its launch was quiet, almost unnoticeable, but its implications are profound. The platform's core purpose is to enable direct trade and investment between member countries, allowing them to use their own local currencies, or even a new shared reserve currency. This means bypassing the traditional Western financial rails that have dominated global commerce for decades. This first live transaction, settled in digital real and rupee, marks a practical and symbolic step toward de-dollarization. It demonstrates that alternatives to the dollar-based system are not just possible, but already operational. Years of meticulous planning, technical development, and support from the Bank for International Settlements have all led to this pivotal moment, setting the stage for a new era in international finance. The system's advanced distributed ledger technology has now proven it can handle real-world settlements efficiently and securely, signaling a fundamental transformation in how nations can interact financially. The BRICS Bridge isn't designed to replace the old financial system overnight. Instead, it offers a credible alternative, one that's already in motion, quietly reshaping the landscape of global trade and finance, and opening new possibilities for the future. To truly grasp the significance of the BRICS Bridge, it's essential to first understand the global financial system it seeks to challenge, a system that has shaped the world economy for generations. Since the end of World War II, the US dollar has served as the world's primary reserve currency, a status established by the historic Bretton Woods Agreement in 1944. This agreement set the stage for a new era of international finance, with the dollar at its core. Even after the gold standard was abandoned in the 1970s, the dollar's dominance endured. Today, most global trade, whether it's oil, technology, or raw materials, is priced and settled in dollars, making it the lifeblood of international commerce. The SWIFT network, a secure messaging system, connects over 11,000 financial institutions across more than 200 countries. It enables trillions of dollars in cross-border payments every day, with the vast majority ultimately settled in US dollars. This infrastructure gives US authorities unparalleled visibility and leverage over global financial flows, allowing them to monitor, influence, and sometimes control the movement of money worldwide. As a result, the US can track transactions, impose sanctions, and even isolate entire nations from the global economy, as seen in high-profile cases like Iran and Russia. This power extends far beyond simple economics. It's a tool of geopolitical influence. While this structure has provided decades of stability and liquidity, it has also meant that the economic fortunes of other countries are closely tied to US policy decisions, sometimes at the expense of their own interests. Central banks around the world hold vast reserves of US Treasury bonds, further reinforcing the dollar's central role and deepening their dependence on the American financial system. However, this heavy reliance on a single currency and infrastructure has created vulnerabilities. It has also bred resentment among nations who feel their economic sovereignty is compromised. Increasingly, many countries view the current system not just as a source of stability, but as a mechanism for unilateral power, one that can be wielded against them at any time. Their ability to make independent economic decisions is often limited by US interests and policies, leading to growing frustration on the world stage. This mounting dissatisfaction is now fueling a global search for alternatives, new systems and technologies that promise greater autonomy and balance in international finance. The BRICS Bridge represents the most ambitious and coordinated response yet, aiming to reshape the future of global finance. Monetary imperialism describes the power a nation wields by controlling the world's dominant currency. US interest rate decisions ripple globally, forcing other countries to react, often at the expense of their own priorities. This dependence limits policy independence and ties global economic health to US decisions. Financial sanctions further highlight this power. Nations can be cut off from the dollar system without a single shot fired. While sanctions target threats, they're also seen as coercion, prompting even allies to question their reliance on the dollar. For BRICS and others, building alternative infrastructure is about reclaiming economic self-determination. It's not just about efficiency, but sovereignty. The push for a multipolar world order is a direct response to the risks of a single-country system. The BRICS Bridge is a quiet but firm step toward that goal. The BRICS Bridge is fundamentally transforming the landscape of cross-border payments, introducing a new era of efficiency and autonomy for its member nations. Traditionally, international payments have been routed through U.S. banks, requiring conversion to dollars and often resulting in delays and extra costs. Now, BRICS members can transact directly in their own digital currencies, bypassing the old system entirely. For example, a Brazilian company can instantly pay a Chinese supplier, exchanging real for digital yuan without relying on intermediaries or waiting for days. This direct connection streamlines business and fosters stronger trade relationships. Settlement times that once took days are now reduced to mere seconds, and the elimination of multiple layers of fees means significant cost savings for businesses of all sizes. By enabling seamless trade in local currencies, the BRICS Bridge reduces the global demand for US dollars and helps shield member economies from the volatility of US monetary policy and external shocks. Every transaction is recorded transparently on a shared digital ledger, providing real-time visibility and security. Unlike the opaque, fragmented traditional banking system, the deliberate exclusion of the dollar is a strategic move, creating a self-contained financial ecosystem that empowers BRICS nations to trade on their own terms. While members can still access SWIFT or use dollars for transactions with other global partners, they now have a robust, independent payment channel that offers greater flexibility and control. This new system builds resilience against economic sanctions and reduces the geopolitical leverage that has long been tied to the old, dollar-dominated financial order. The BRICS Bridge is more than just a technical upgrade. It's a practical step toward a truly multipolar financial world, where power and opportunity are more evenly distributed. Ultimately, it's not just a new payment rail, it represents a bold strategic shift in the global financial landscape, opening new possibilities for international trade and cooperation. Technically, BRICS Bridge and SWIFT are worlds apart. SWIFT is a centralized messaging system from the 1970s, sending payment instructions through a central hub, with settlement handled separately by correspondent banks. This process is slow and involves many intermediaries. BRICS Bridge uses distributed ledger technology, no central hub, but a shared ledger run by member central banks. Transactions are validated and settled instantly, in a single atomic step. This means faster, cheaper and more transparent payments. Unlike public blockchains, BRICS Bridge is permissioned. Only authorized institutions participate, ensuring regulatory compliance. The system uses central bank digital currencies, not volatile crypto, blending new tech with state-backed stability. It's a leap forward in efficiency and control, setting it apart from both SWIFT and public crypto networks. The BRICS Bridge has caught the world's attention. Many countries, especially in the global south, see it as a way to diversify risk and reduce dependence on a single system. Faster, cheaper payments could unlock new trade opportunities for developing economies. Nations wary of U.S. sanctions view the bridge as a shield, offering strategic autonomy. Even central banks outside BRICS are studying the technology, eager to learn from this real-world experiment. The M-Bridge project's openness has made it a global testbed for digital currencies and new payment rails. The lessons here could shape the next generation of international finance. The BRICS Bridge could trigger lasting shifts in global finance. As more trade is settled in local currencies, the dollar's dominance may gradually wane, not collapse, but diminish. The world could move toward a multipolar currency system, with several major reserve assets. As more countries join, the bridge's utility grows, creating new economic blocks with their own payment systems. This could mean deeper regional integration, but also more complex global interactions. For the US, a reduced dollar roll could raise borrowing costs and weaken sanctions as a policy tool. The US and its allies may respond by upgrading their own systems or seeking to integrate with new platforms. The choices made now will shape whether the future is cooperative or fragmented. The BRICS Bridge is just the beginning of this new era. The global economic map is being redrawn. Washington's public response to the BRICS Bridge has been calm, emphasizing the dollar's enduring strengths. Privately, US policymakers are watching closely, aware that financial weaponization has accelerated the search for alternatives. The US is working to make dollar payments faster and cheaper, and exploring a digital dollar. Diplomatically, it's highlighting the benefits of the current system and offering partnerships to keep countries in the dollar orbit. The US may also push for strict global standards to ensure new systems remain transparent and compliant. Ultimately, the US will likely blend competition with adaptation, innovating while preparing for a world with multiple major payment systems. The era of unchallenged dollar dominance is ending. The challenge is to manage this transition smoothly, preserving US influence without triggering a rapid exodus. The next chapter in global finance will be defined by how the US and others respond to this new reality. The world is watching. The BRICS Bridge isn't a declaration of financial war, but a quiet evolution. It marks a shift from a unipolar system to a multipolar one, where multiple currencies and platforms coexist. The future may bring fragmentation, then new forms of integration. Different systems will serve different regions and purposes, requiring businesses and central banks to adapt. The rules aren't being torn up, but rewritten for a new era. The story of the BRICS Bridge is about beginnings, not endings. A testament to technology's power to reshape the world. The quiet click of a coffee trade may have opened the door to a new global financial order.